Sofi stock has officially hit a new all-time low, and we know how you are feeling. After all, Sofi is currently our biggest position. I hate to say it, but guys and gals, we sold. Before you dislike and unsubscribe, let me finish. We sold all of our Tesla shares to buy more Sofi. Ladies and gents, we're not selling a single share, and if they want our shares, they'll have to come and get it. As the title suggests, short sellers are waging a full-on frontal assault on Sofi, and we here at Wealth Gambit are doing everything we can on our end to hold the line. And we're not alone. Anthony Noto, Sofi's CEO, has also been loading the boat with direct buys of Sofi shares. As you can see, Anthony Noto started buying again back on March 4th, picking up 15,000 shares of Sofi for around $9.96 a share. What we love about Noto is that he is, how the kids say, buying the freaking dip, or dollar cost averaging down. As you can see, Noto has been buying in increments of about 15,000 shares, which means he's not going all in on the first dip, but instead averaging into the dip. What a G. Now, we are definitely not financial advisors, and this is not financial advice, but in our non-financial advisor opinion, a light dip calls for light buying, and a heavy dip calls for heavier buying, which is what we did. When we sold our Tesla to buy shares of Sofi, we were able to get additional shares of Sofi for an average price of $8.43 a share. We also bought some 2024 Leaps just to spice things up a bit. Now, this is where things get really interesting. Let's take a look at all of Anthony Noto's insider activity. As you can see, over the past 6 months or so, Noto has been growing his position in Sofi fairly steadily, most of which is through, quote, disposition non-open market, which is basically share-based compensation, as you can see in these pictures here. Now, what's so interesting about this, you may ask? Well, Anthony Noto has been increasing his position in Sofi in more ways than one, most of which being share-based compensation. He does from time to time buy shares of Sofi directly. Now, back to the picture. As you can see, Anthony Noto has been buying more shares recently than ever. This, in our opinion, is an incredibly good sign. Here's why. Now, we've said this quote in our previous video, but we'll say it again. Insiders might sell their shares for any number of reasons, but they buy them for only one. They think the price will rise. Peter Lynch. How interesting that Anthony Noto is buying heavy at these levels, huh? All while short sellers are waging absolute war. For those of you that have been feeling the pain in Sofi recently, we here at Wealth Gambit totally understand. Like we said, Sofi is currently our largest position by far. This means when it dips, we definitely feel it. Ladies and gents, Sofi Short Interest appears to be at a new all-time high. This means, realistically, it's going to get a lot worse before it gets better. So be prepared. If it hurts, go for a walk and clear your mind. The unfortunate part about Sofi Short Interest is that being at 21.59% of the short being floated, this is definitely high, no doubt about it, but not high enough for a short squeeze. Not good enough! At least just yet. Regardless, we here at Wealth Gambit will be holding, just like the commander himself, Anthony Noto. If you plan on holding too, comment right there with you in the comment section down below, so we know who we'll be seeing in the trenches. We know Noto will be there along with the other Sofi execs, but the question is, will you? The market in general has been taking an absolute beating, with potential World War III threats looming in the background, interest rates set to rise, and an overall increase in uncertainty. This has led to stocks all over crashing. This coupled with short seller attacks, and you get to see great companies at ridiculous prices, just like Sofi. To end off the video, we'll leave you with a video from Amazon's Jeff Bezos talking about how the company and the stock price are two entirely different things. Before we do though, if you haven't already, please smash that like button for the YouTube algorithm and subscribe if you haven't already. We're currently at 3,300 subscribers and are trying to get to 4,000 by the end of the month. Also, for you true Sofian soldiers, feel free to join our Sofi Investors Facebook group. Link will be in the description below. Lastly, we know you guys and gals definitely feel the pain during times like this. So we here at Wealth Gambit have been thinking of launching a Patreon near the end of next month. On the Patreon, we would post exclusive content and of course have a private Discord chat, reveal our entire stock market portfolio, numbers and all, and have some type of system where we could send you the latest Sofi updates at near real time. If that's something you'd be interested in, comment "Let's go Patreon" in the comments below so we know how many of you are interested. We appreciate it a lot. Without further ado, Let's hear from none other than Jeffy B, ex-Amazon CEO.
Your stock at one point, I think, went to $100, but then it went down to $6 or something like that.
At the peak of the internet bubble, our stock peaked somewhere around $113.
Okay.
And then after the internet bubble, busted open, our stock went down to $6. It went from 113 to 6 in less than a year. My annual shareholder that year starts with a one-word sentence, and that one-word sentence is the word ouch.
So most of those internet companies of the dot-com era are out of business.
Yeah.
You survived. What was it that made you to survive, and virtually the rest of them are gone?
That whole period is very interesting because the stock is not the company, and the company is not the stock. And so as I watched the stock fall from 113 to 6, I was also watching all of our internal business metrics, number of customers, profit per unit, everything you can imagine, defects, etc. Every single thing about the business was getting better and fast. And so as the stock price was going the wrong way, everything inside the company was going the right way. And we didn't need to go back to the capital markets. We didn't need more money. The only reason, a financial bust like the internet bubble bursting is, makes it really hard to raise money. But, we already had the money we needed. So we just needed to continue to progress.